Alves, Technical Marketing Manager with Wolters Kluwer Tax and Accounting. And joining us for a cup of coffee today are Ross Sullivan, Chair of the National Tax Policy Group, and Radha Mohan, Policy Advisor and Associate at Brownstein Law Firm. Now, the topic for today is updates from Washington, D.C. as of this week, and there seems to be a lot going on in Washington these days. Over the past few days, we have seen the collapse of talks between Republicans and Democrats on COVID-19 relief legislation, and now over the weekend, President Trump issued 4 executive orders aimed at helping individuals and businesses. So, Radha, what were the 4 executive orders?
Hi, Luis. The 4 executive orders are a deferral of payroll taxes, a new wage assistance program, a deferral of student loan debt payments, and a rent eviction moratorium.
Okay, so Ross, let's go ahead and focus on the first 2. Can you explain to us how this executive order will defer certain payroll taxes for everybody?
Sure, Luis. So President Trump decided he wanted to put more money in workers' pockets. So he directed Secretary Mnuchin to issue guidance that would tell employers not to withhold the 6.2% Social Security payroll tax from their checks for the rest of the year. Well, beginning September 1. The guidance will say that this program applies to workers who earn $4,000 or less for a 2-week period, or about $104,000 for the year.
Okay, so does the president actually have the authority to cancel the collection of payroll taxes?
A fascinating question, Luis, and the talk of the town here in Washington. It turns out he doesn't have the authority to cancel the taxes, but it's clear that what he did in the executive order is legal and constitutional. He can defer payment of the taxes. Section 7508 Cap A of the Code clearly gives the Secretary of the Treasury authority to delay payment of obligations if the taxpayer is impacted and affected by a federally declared disaster. So President Trump told Secretary Mnuchin to do that. And this is not the first time that we have deferred or eliminated payments on payroll taxes. In 2011, 2012, Congress reduced the rate from 6.2% to 4.2%, and it stayed that way for about 2 years.
Okay, and so with that, Ross, what are the issues that businesses have to resolve, and will this be easy to implement?
Well, the first issue they have to resolve, Luis, is do I have to participate? Do I have to implement this, or is it elective? Well, the executive order is unclear. It says deferral shall be made available with respect to any employee. If that means that the employer has a choice, then an employer could choose not to do it at all, or they could make it available to their employees. Secretary Mnuchin indicated that that was the correct interpretation. However, we expect when the guidance comes out that most employers are going to try to figure out how to do this. So some are looking at a model where they make it mandatory. They will not withhold the 6.2% on anybody's check who's eligible. Others will follow a model that companies have used in retirement plans called the opt-out plan. They'll say, we're going to give you this 6.2% unless you tell us not to. Others may look at an opt-in plan and affirmatively require their employees to say, I want that 6.2% in my paycheck. Don't withhold it for me. We'll see how companies decide once they get further guidance from the Treasury Department.
So I understand that this 6.2% break will be for most workers, since it's going to cover individuals making up to $104,000 per year. But what if their compensation fluctuates? How does the employer know what to do at that point?
That's a really great question, Luis, and one that a lot of employers are grappling with right now. Hopefully, we're going to see guidance on the issue soon, but there are a couple of possibilities. The first is what we call the all or nothing approach. If compensation is over $4,000 during a biweekly pay period, then the employer would just withhold the 6.2%. The second option is called the annualization principle. And what that means is compensation is on track to be less than the annual equivalent of $4,000 per biweekly pay period, then the taxes would not be withheld. It's essentially an estimation.
Okay, so Ross, is there a potential problem here? What if a business does not withhold the 6.2%, but then the employee leaves the company and Congress does not come back and forgive the payments? What happens then?
Well, this is where another uncertainty emerges, because the executive order only defers the tax and does not forgive it. Now, the executive order does not address ultimate liability here, but it does tell Treasury come up with a plan, either for legislation or other executive action, to try to deal with this forgiveness issue. Now, as a practical matter, Luis, I think Congress is likely to forgive any tax that is deferred. It's hard for me to see how Republicans, Democrats, no matter who's in the White House, would look this coming January at when they've told employers to give the money to employees and then make them write a check and give it back. However, that is a possibility. And if that happens and the case that you mentioned comes into play, a worker changes jobs or something else, then initially the employee is going to be liable for that tax. And the IRS may tell them they need to do it on their 2010 tax return or some other method. However, if the employee is gone, then the employers could be liable for that amount. And not only that, if the employer does pay the amount, then the employee has cancellation of debt income and may have to pay tax on that amount.
So definitely, Ross, a lot to cover there. And finally, Radha, can you tell us a little bit more about this new unemployment insurance program?
The president's new executive order essentially creates a program to replace lost wages. Individuals are eligible to receive a $400 payment on a weekly basis. The federal government would contribute $300 and states would contribute $100. Any individual who currently receives at least $100 in state unemployment benefit would be eligible for this payment. The program was set to begin on August 1st and terminate on December 5th. It's very similar to the $600 weekly supplemental payments that were enacted under the CARES Act. The Trump administration clarified that states do not need to provide an additional $100 payment on top of traditional state UI benefits. Traditional state UI benefits basically seem to count towards this match. This basically means, Luis, that some individuals might only see a $300 benefit. The bottom line is this is going to be done on a state-by-state basis, and the benefit to individuals will vary based on where they live.
So definitely a lot of information to consider, and we appreciate the insights directly from Washington, and we'll stay tuned for more breaking news. Now, the Brownstein Law Firm will be present at the CCH Forward Together virtual conference, as well as the GetWise virtual training event in the fall. So definitely a lot more insights from the team in the coming months. For more information, you can visit our websites that you see on screen. And as always, Ross, Radha, thank you so much for your time today. Thank you for joining me for a cup of coffee. And thank you everybody else for watching. Bye-bye.